Hello there, are you ready to set off on a brand new adventure? Today we're not packing our bags for a trip to the moon or trekking through distant lands. Instead, we're about to dive into a world that's buzzing with excitement, challenge and opportunity, the world of day trading. Now, you might have heard people talk about trading stocks, maybe even seen it in movies with fast-talking characters and flashing screens. But what's all the fuss really about? Day trading isn't about rocket ships or wild gambles, it's about making quick decisions, staying alert and learning how to spot opportunities in the blink of an eye. At its core, day trading means buying and selling stocks or other financial assets within the same day. You're not holding on to them for weeks or months, hoping they'll grow. Instead, you're jumping in and out, sometimes in just minutes or hours, aiming to catch those small price changes that happen all the time. Think of it like running a fruit stand at a busy market. You don't wait for your apples to ripen overnight. You want to sell them while they're fresh, moving quickly to make the most of every moment. Day trading is a fast-paced game where timing and quick thinking are your best friends. The main goal? To catch those tiny price movements and turn them into profit. It might not sound like much at first, a few pennies here, a few cents there, but add them up over time, and you could see some real results. Imagine you're at a village fete and you spot a prize-winning marrow for just £1. You buy it, and before the fete ends, someone offers you £1 and 10 pence for it. That 10 pence is your profit. Simple, quick, and satisfying. That's the essence of day trading, just with stocks instead of marrows. Day trading works the same way, but everything happens on your computer screen. You're buying and selling digital marrows, stocks, currencies, or other assets, hoping to make a little profit each time. But here's the twist. The most important tool in your trading kit isn't a fancy computer or a secret formula, it's your clock. Time is the heartbeat of day trading. In this world, every second counts. Sometimes a single minute can feel like an eternity as you wait for the perfect moment to act. Other times an hour can disappear in a flash, leaving you wondering where the time went. Managing your time and attention is just as important as picking the right stock. The time frame you choose, how often you check the market, how long you hold your trades, shapes your entire trading experience. Are you checking every 5 minutes or every hour? Each choice changes the pace and style of your trading. It's a bit like picking the right tool for a job. Each time frame has its own rhythm, its own tempo. Some tools are made for speed, others for patience. Finding the one that fits you best is key. Some traders love the thrill of fast and furious action, jumping in and out of trades in minutes. Others prefer a more relaxed pace, watching the market unfold and making careful moves. Getting your timing right from the very start makes your trading journey smoother, less stressful, and much more enjoyable. It's like finding the perfect rhythm for your own adventure. So choose your path wisely. The right approach will help you enjoy the ride, learn more, and maybe even find some success along the way. Remember, understanding time frames is the first crucial cog in your trading machine. Get this right, and you'll be well on your way to mastering the art of day trading. Let's get down to brass tacks. What is a time frame and why does it matter so much in trading? If you've ever stared at a chart and wondered why it looks different every time you change a setting, you're not alone. Timeframes are one of the most fundamental concepts in trading, but they're also one of the most misunderstood. A time frame is simply the chunk of time you use to view the market. It's the window you choose to look through, and it shapes everything you see. Whether you're glancing at a chart for a few minutes or analyzing trends over months, the time frame you pick determines the story the market tells you. Think of it like a flip book. If you draw a picture on every single page and flip through quickly, you get a fast, detailed animation. This is like using a short time frame, where every tiny movement is captured and nothing is missed. But if you only draw on every 10th page, the animation slows down and you see a broader, more general story. That's what a long time frame does. It smooths out the noise and lets you focus on the bigger picture, ignoring the little wiggles along the way. In trading, we use charts made of candlesticks to visualize price movement. Each candlestick is like a mini story showing what happened during a specific period. Each candlestick shows what the price did during a set period, whether that's a minute, an hour, a day, or even a month. The time frame you choose decides how much action is packed into each candlestick. On a 1-minute time frame, you get a new candlestick every minute. This means you see every little price jump, every twitch, and every moment of excitement. It's perfect for those who love fast-paced action and want to catch every move. Switch to a 15-minute time frame and each candlestick now covers a quarter hour. You lose some of the tiny details, but you gain a clearer view of the bigger trends. It's like zooming out to see the forest instead of just the trees. It's a bit like swapping a magnifying glass for a pair of binoculars. With the magnifying glass, you see every grain of sand. With binoculars, you see the whole beach. Both are useful, but for different reasons. A small time frame gives you a close-up, fast-paced view. You can spot quick opportunities, but you might also get overwhelmed by all the noise and false signals. A larger time frame zooms out for a strategic perspective. You see the major trends and avoid getting distracted by every little blip. This is great for planning and making big-picture decisions. Neither is better. They're just different tools for different jobs. Sometimes you need precision, sometimes you need perspective. The best traders know when to use each one. The trick is to find the time frame that helps you see what matters most to you, without making your head spin from information overload. It's about clarity, not confusion. Your time frame is the lens through which you see the market. It shapes your entire trading experience, from the signals you spot to the decisions you make. Choose the one that fits your style, your goals, and your personality. Are you a quick thinker who loves action, or a patient planner who likes to see the big picture? There's a time frame for everyone. That's the secret to not getting your wires crossed in the world of trading. Pick the right time frame and everything else starts to make sense. Let's peek at the most frantic time frame, the 1-minute chart. Every minute, a new candlestick appears, constant movement, non-stop action. Traders who use this are called scalpers. They're after tiny profits from lots of quick trades. It's like knitting. Each stitch is small, but it adds up fast. Scalpers must be glued to their screens. No time for tea breaks. Decisions are made in a snap with little time for deep analysis. For example, if a stock jumps for 3 minutes, a scalper might buy in, ride the wave for a minute, then sell at the first sign of hesitation. The goal? Grab a few pennies per trade over and over. It's fast, exciting, and exhausting. For some, it's the only way to trade. For others, it's simply too much. If the 1-minute chart feels too wild and chaotic, it might be time to step back and try something a bit calmer, like the 5-minute chart. The 1-minute chart can be overwhelming, with prices jumping up and down so quickly that it's hard to keep up. For many traders, this pace is simply too fast, making it difficult to make thoughtful decisions. That's where the 5-minute chart comes in. The 5-minute chart is a favorite for many day traders because it strikes a great balance between action and clarity. You still get plenty of opportunities to trade, but the pace is more manageable. It's like turning down the volume on the market's noise so you can actually hear the music. With a new candlestick forming every 5 minutes, you have more time to think, analyze, and plan your next move. This extra breathing room allows you to spot patterns as they develop, rather than reacting to every tiny price movement. The 5-minute chart helps filter out some of the market noise that can make shorter time frames confusing. Patterns like trends, breakouts, and reversals become much clearer, making it easier to spot real opportunities. Trends that last several 5-minute candles are generally more reliable than those quick fleeting moves you see on the 1-minute chart. This means you can have more confidence in your trades, and you're less likely to get shaken out by random price spikes. On the 5-minute chart, traders typically make 5 to 10 trades a day. This gives you enough action to stay engaged, but also enough time between trades to analyze what's happening, adjust your strategy, and avoid making impulsive decisions. It's a less stressful way to trade compared to scalping, but it's still active and exciting. You're not glued to the screen every second, but you're never bored either. For example, a trader might notice a gentle climb over 6 candles about half an hour, wait for a small pullback, then buy and hold for 20 to 30 minutes. This approach lets you catch bigger moves without the stress of constant decision-making. The 5-minute chart approach aims for bigger profits per trade, with less frantic, split-second choices. It's a methodical, rewarding way to trade, one that feels more like a proper job than a roller coaster ride. For many, it's the perfect balance between excitement and control. Now let's slow down with the 15-minute chart, the gentle person's time frame. Here, a new candlestick forms only 4 times an hour. This gives you time to analyze, plan, and maybe finish a chapter of your book. The 15-minute chart filters out almost all the noise, showing only the major moves. Trends are stronger and more reliable. Traders using this chart look for 1 or 2 high-quality trades a day. They wait patiently for the perfect setup, then act decisively. For example, they might watch a pattern form over hours, set an alert, and only trade when a clear breakout happens. They hold trades longer, aiming for bigger profits. It's calm, strategic, and less stressful. Patience is the key tool here, a true chess game in the market. Every tool has its strengths and quirks, so do time frames. The 1-minute chart offers endless opportunities, but it's exhausting and full of false signals. The 5-minute chart balances action and clarity with more reliable signals and less stress. The 15-minute chart gives the best quality signals and bigger profit targets, but fewer opportunities. 1 minute is for speed lovers, 5-minute is the all-rounder, 15-minute is for patient strategists. It's a trade-off, like choosing between different cheeses. Do you want constant nibbles, a satisfying bite, or a rich occasional treat? Each suits a different taste and style. The key is to understand these trade-offs before you choose. Pick the one that matches your appetite for action or patience. That's how you find your perfect fit. There's no best time frame, only the best one for you. It should fit your personality, lifestyle, and goals. Are you energetic and decisive, or patient and strategic? How much time can you dedicate to trading each day? The right time frame should feel comfortable and natural, not stressful or boring. Find the pace that matches your rhythm and trading will feel just right. Feeling overwhelmed by choices? Here's how to start. Begin with a slower time frame, 5 or 15 minutes. This gives you time to learn patterns and practice without rushing. Pick one time frame and stick with it. Don't jump between charts. Focus on learning its rhythm and personality. Use a practice account to test your skills. No real money at risk. Keep a journal. How did it feel? Were you stressed or bored? Did you see results? Remember, your choice isn't permanent. As you gain experience, you can adjust your time frame. Start simple, practice lots, and adapt as you grow. The market isn't going anywhere. Find what works for you right now. That's the best way to build your trading skills. We've toured the world of time frames, from frantic 1-minute charts to calm 15-minute ones. Day trading is about quick market trips, and your time frame is the lens you use. Short time frames are fast and detailed. Longer ones are slower and clearer. 1 minute is for scalpers, 5-minute is the all-rounder, 15-minute is for patient strategists. There's no magic formula, just the right fit for you. Start slow, be patient, and use a practice account. Learn one time frame well before trying another. Trading is a marathon, not a sprint. Open a practice chart, pick your time frame, and watch the market unfold. Now time for a slice of Wensleydale. Cheerio!